Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to hear about two companies with good energy, different yet connected. From our strategists Shiraz Mian and Dave Boren, who joins us via Skype. And Dave, we're going to start with you because you actually have an energy company.
I do, Terry. So I also love a story about a company that stands to benefit from government action, legislation, regulations. And Sunrun, symbol RUN, is one of those companies. So the solar industry has been kind of stuck in the mud lately. The perception is that the federal government is reducing the credits that are available to people that install solar energy, especially in residential situations, and that there's intense price competition for the production of solar cells and solar panels that make the power. Sunrun kind of does an end run around the whole thing because they don't make the panels. They're basically a financial engineering company that created contracts to install panels on residential customers' homes. It saves the customers a lot of money. They pay a bill every month that's lower than what their electricity bill would have been, and they get to generate their own clean, renewable energy on their own home. Sunrun has a contract that allows them to increase the rates at the same basic pace that the electricity rates would have been increasing on a 20-year contract and collect the government tax credits for installing the solar energy. The margins are improving almost automatically in this business. It's a guaranteed moneymaker. In the state of California, where I'm sitting right now, we have 40 million people. It's the 8th or 9th largest economy in the world. And the state of California has mandated that all new homes built after 2020 have to have solar power on them. The home builders don't want to add solar power by adding $8,000 to $12,000 to the cost of a new home. And Sunrun offers them the opportunity to put solar energy on all those new homes and charge the customers over a 20-year lease period as opposed to increasing the cost of the homes.
And so the connection between your company and JP Morgan that Shiraz is going to talk about is through those tax credits, correct?
It is. So the tax credits are that you can carry them forward into a new tax year and you can transfer them to a new customer. And so part of the way that Sunrun generates revenues is by selling the tax credit. They own the equipment, so they get the federal tax credit. They can sell that tax credit to conglomerates like JP Morgan, who have an appetite for reducing their tax bill.
All right, Mr. Mian, JP Morgan, you're going to talk about, you notice how he always gets that in there, though. Sitting out here in California, right, all that stuff, just tries to rub it in. The energy for your company comes in the form of expected revenue growth supporting its profitability, right?
It sure is. I actually, just on an aside, when Dave was talking about his energy company, I was looking at Dave's dog. I was hoping Dave's dog will have something useful to say on the topic too, but I was disappointed. So getting to the JP Morgan, no need to explain what the company does. Financial supermarket, the largest bank, largest investment bank, one of the largest asset managers, one of the best run financial services companies in the world, had impressive numbers in Q1, amazing numbers last year. The stock has done about in line with the market this year and is currently close to its 52-week high. Analysts have been raising their estimates for this year and next based on efficiency gains in their business. Not great, but decent top-line growth and very impressive bottom-line growth. And that has pushed the Zacks rank to number 2 now, which is a buy. But despite the strong gains we have had this year, particularly since the post-Christmas bottom, JP Morgan in specific and the banks in general represent one of the most underfollowed, underappreciated sources of value in the market, in my judgment. And the reason why there's less excitement about these banks, even though they have impressive profitability, even though they have excellent balance sheets and pay growing and fairly juicy dividends. JP Morgan's dividend, by the way, is about 2.8%. Is this fear that we are at the end of this economic cycle, meaning that a recession is in the horizon. That is no longer the dominant fear in the market, at least not to the extent it was in the fourth quarter of 18. But this fear keeps folks on the sidelines because these are very cyclical businesses. And not only business weakens when the economy turns down, but the quality of their credit turns down as well. So they get this double hit. I don't believe we are heading towards a recession. Who knows when?
Well, but you know, typically, because you've been doing this a long time,
Yeah.
following it as long as probably I have or longer, that fear talk always bubbles up like well in advance.
That's right.
Of
Yeah.
any recession.
Absolutely. So you're getting a quality company at a very decent value point. JP Morgan currently is trading at 65% the trading multiple. The forward 12-month PE is trading at 65% off the S&P 500. At the time, at the post-Christmas bottom, it was trading at 55% off the S&P 500 multiple. Historically, since it is such an economically sensitive business, it has traded in the 85 to 90% range. So a big gap relative to what one would call as a normal rate for a company like this. So excellent credit, excellent balance sheet, very profitable, decent top-line growth. I'm not presenting it as the replacement for a faster-growing energy company along the lines that Dave is presenting, or the next Facebook or Google. It's a stable, steady-as-you-go operator that you don't need to worry about day in and day out, and will give you a growing dividend on top of it. I believe that the market is coming around to that realization, and that's why we have seen more momentum in the stock in the recent past compared to before. And folks getting into JP Morgan shares now will be well rewarded.
Okay. Do you own either of these two companies?
I own JP Morgan in the focus list portfolio.
All right. Dave, what about you?
I don't own either. I own both of them as components of ETFs that I own, but I don't own either individual stock.
All right. Well, thank you both for that. Teach that dog how to say a few things for next time, would you? With Dave and Shiraz, I'm Terry Ruffalo.